Hello everybody, I'm Giuseppe Basilio, also known as the FibStalker. Thanks for joining in today and watching this weekly video review. This is part one. Today is April 29, 2018. It's 15 to 11 p.m. EST time in Toronto. And this video is part of the FibStalker analysis and trading service. As usual, I ask you to stop and review and accept the usual disclaimer here. All right, so thank you, and let's dive into the markets here. We'll start from the SP 500. Nothing has changed here. This market is still in this a nonsensical move up and down. And we know, and now it's a few weeks we have analyzed this. We also analyzed this in the Q&A last week. Price is in a FibStalker pattern, and these are either continuation or inversion patterns. And at the moment, the bears here are in control. As you can see here, the bulls are not capable of holding this price. And now this price is moving higher again, potentially back into the 2708 area. Okay, so this market has traded 50% shorts here into first and second target. The next measure move here has traded, and then it has failed. Okay, and once failed, the first thing we do, we trace the next measure move, which actually initially found participation, and then as you can see here on Thursday, and then failed here at the open. So very little to do in this market unless you're working on the smaller time frames. All right, so dollar index. The dollar index had a beautiful run up last week, which leaves this price pretty extended here. When we look at the weekly, the measure move that we were following, that was initially respected, not respected, and then respected again, we see that the first target was it. So on the weekly here, there are two possibilities: either the market moves into 92.15 or the 50% comes into play. Now, because we saw 2 weeks of price extended here, we need to go down to the daily and see what can happen there. Okay, and actually, when we see this strong move higher here, actually we need to we can make several considerations here, and a deeper retrace would bring price into 90.60, and if the price is the retrace is shallower here, then this could bring price into 70.33, provided we see the retrace. Okay, so there's a lot of course, as usual, there's a lot of chatters about what the market should be doing, right? We don't know what the market will be doing. What we know is that this market could continue higher into the second target, despite what bloggers and people say on the social media. Okay, but if it retraces, then these are the levels to watch, and there is also an aggressive level that comes from the weekly, which is the highs to highs. I'm going to show it on the daily here. That's the highs to highs, in case that retrace is very shallow into the first target. And if this market continues higher aggressively, that's where we're going to see this market stop. Okay, and I want to look at the US dollar Singapore dollar here, which we use the proxy of the dollar. And as you can see, the next measure move here of this market, remember that for this market we had an extension here, because this market was very extended these 2 days, which was from the bar high here to the highs that came into play and brought price near the first target. The first target was 132.99, that was 132.95, so 4 + 1 pips, that's considered traded. All right, so The next measure move is same anchor, new high, and this measure move is in play right now. Okay, so if these markets continue higher, if the dollar index continues higher, the US dollar Singapore dollar is likely to continue higher as well. Okay, right away from here without a rest. And this is a valid FibStalker level here, because it was already tested, the anchor, and the anchor is being at the moment respected again. Now, if this price moves lower, we could see a deeper retrace, and that could come from the full 50% here in this market, or the inner notable anchor on the daily time frame. Gold and silver. Gold went to retest, as we mentioned a number of times, the 1311. Now this level has been tested once, twice, and 3 times. Still a solid level. Of course, if the dollar index will continue lower, the 20 higher, the 2096 is going to be piece on the downside, and the doors are open here now, would be open now to retest 1263. But at the moment, this level has held, and as we can see here, this is a market which is in a range on top of a 50% long. Okay, whether the market is capable of moving back into the high of the range depends on what happens in the dollar index. We could still have a second leg higher in the dollar index, but the price will tell. I cannot say for sure that that's gonna happen, like many people seems to be doing. So silver continued lower after that false break, bear trap. The extension here never came into play, so we're gonna retrace. I'm gonna retrace that extension using the same. Actually, I'm gonna use the lower low here, just because the market is very extended. So if we are getting that correction in the dollar index, correction low in dollar index, the silver could go and trade the 1676 for a continuation lower. All right. So let's start now to look at the majors. We'll start from the Australian dollar, US dollar. You remember that this market, after moving with this raging bull move here that we had in December, starting in December till basically the end of January, then this market started trading in measure moves here, short traditional measure moves. 79.46 to first target. The next measure move traded 2 weeks ago here. Its highs to lows, and last week the first target of the second measure move here was hit. Now this market has the potential to continue lowering at the bottom, to the bottom of this range here. Okay, and differently from the New Zealand dollar, US dollar, this market actually has not traded 50% short here. What we were looking at is this measure move, and the sequence has failed. Okay, so I'm gonna put this level as well below here. It's very close to that bottom of the range. So this market too could actually retrace and give us a potential continuation here short, and the two levels that we indicated last week still are the same. It's the 77.19 and the 76.56 for the anchors, and that's what we could use to identify the next measure move. Of course, this market can always come back and retrace all the way into 76.72, which would be the next measure move. Okay, and if that trades, the first target is below. And let me remove the inner here. If that trades, the first target will be below the bottom of the range and the 50%. So the bottom of the range will probably be the target there. Euro dollar, we saw selling last week for the euro dollar and the pound as well, all the European compact. And at the moment, this market seems to be coming back for a retrace here, and it has been trading previous highs here basically. And because this market is very extended here, the extension short I'm gonna use comes from another bull anchor here. Okay, so that's if this market retraces and brings price into 2122 level. That's the lows, the previous lows here, and this could be an opportunity for a short. Okay, so we'll see whether that happens. And there's a similar situation with the pound US dollar. Although the pound US dollar still could have some way to move lower. You remember last week one of the levels we were looking at, not sure whether I mentioned that it was actually an extension short here, which traded twice. Traded on the 25th here and then 26th as well. So traded Wednesday and Thursday here and brought price into the first and second target. The reason why I say that this could continue lower is that simply because there is this extension short that could bring price into the bottom of this into the previous lows here. But basically, you know, this has been a lateral move here, and the market has already tested the bottom of the channel here. Okay, but there is this sequence of measure moves which are extensions here that are still in play. And so if the market gets into 138.31 and is rejected, that's that could be an opportunity for a continuation. The Canadian dollar, I don't like it very much. It has traded shorts on the weekly, then traded longs, and since broke the 28.95. If I was to consider a short, I would have done that from these levels if this area was not pierced. So I'm gonna remove this this level here, and this point. It's not impossible for this market to retest the 50% short. Okay, and you know, and in this case, the last who have traded here are longs. So longs at the moment are in control. We need to see whether weekly shorts gonna step in here and reverse this market and continue to move lower. Okay, the Canadian dollar eventually, you know, should strengthen. We're gonna see whether that's gonna happen faster than the US dollar because the interest rates are going up, and so we're gonna see whether that is going to facilitate a move lower here in the US dollar Canadian dollar. US dollar Swiss franc has seen a huge move higher here, and as you can see here, that strong move higher could continue here. There's no guarantee that this market is going to trade back into the next measurement. That would be a gift actually. You remember that this market had a sequence of three short measure move. The last one was 95.41, which brought price into first and second target, well above that second target. Okay, so is this going to retrace? We don't know. The move here is very strong, as we can see here from the monthly as well, and the first target of that measure move is well above previous highs here. Okay, so there is a possibility for just a continuation higher here. We are retrace, which is you know, not on the daily at least. You know, we can always try to follow the sequence of extensions here on the 4-hour time frame, and in this case there is a 50% trading here, so the extensions has failed, but not above a 50%, below a 50% level. So you know, we know that potentially this trend has failed, but it doesn't mean that this market cannot continue higher, because the trend has not failed below a 50% short. Okay, so we'll see what happens here. However, if the market it's the dollar index rests and this market also gets sold, then 97.90 level here, 97.85 would be the level to watch for continuations higher. The Japanese yen also had a run up here, not like the Swiss franc, of course, because this market has a completely different it's in a completely different situation here, and this market is in a range on top of a 50% long. Okay, it's in a range because bulls have failed, and also bears here. When we look at the first move here, we see that bears have failed as well. Okay, however, bears eventually have pushed this price lower, and bulls here were not capable of holding that. So in a way here, to me, what I see here is that bears failed, bull succeeded, bear succeeded, and now bull failed. So to me, although we're seeing a reaction higher here that could come from the smaller time frames, the bears seem to be in control here, and still in control on the larger time frame. Now we saw this run up and move higher here, and that gives us the possibility to trace two continuation moves in case this market continues higher. And if it continues higher, the monthly here and the weekly are suggesting a potential move into 112.40, which is about 330 pips above. But we need a setup for that. Okay. We also cannot forget that there are also other levels that come into play here. For example, this is a 50% short in the last swing move on the weekly time frame, and it's very, very close. It's not traded yet, but it's very, very close. Okay, so that could cause also a slowdown. So my preference here would be, my preference doesn't mean that it's going to happen, but if it happens, if the market slowly sets up here on top of 108.65 or even lower, 108.26, then could be an opportunity to trade into 109.68 and see what happens there, and potentially trying to bring this this price into higher levels. Okay, New Zealand dollar here had 2 weeks move down here, and I mentioned multiple times that I do not anticipate the range to hold, and the reason for that is the 50% here to hold. The reason is that the market is in a range. Now this could be broken, and this market could just continue lower like it did in the past. If it bounces, like for example in October last year, that could be an opportunity to add to short or to open new shorts here. But again, this market could just continue lower on strength of the dollar index. So here something that we want to keep an eye on is see whether this market prints a double bottom on the daily and the 4 hour. If that happens and the market finds participation again at these levels, then there is a possibility for a run up, profit taking, and then a run up into the next area of resistance. And here again, there are different levels here we can use. A very deep retrace would use the anchor 7344 if that happens. Okay, but again, we need to wait and see whether there is participation into the 7038. And the Singapore dollar, we have reviewed that already. So what I'm going to do, I'm going to close this first part here and continue with the second part. Thanks for watching. Bye bye now.